Hey guys, it's Crypto Llama here, and today we're going to talk about the correlations between SPS and DEC and correctly building a strategy that respects this correlation. The reason why I wanted to go over this is because I get a lot of questions from you guys on whether I hold SPS, DEC, or both. And frankly, I wish I had known this stuff when I first started out trading. So I wanted to provide this information to you in an easily digestible format in the hope that it'll help you build a stronger and less risk-adverse portfolio moving forward. Before we jump into that though, myself and Infidel1258 are doing a Splinterlands beta pack giveaway, and all you have to do to be eligible for that is jump in on our Discord channels, which I'll provide in the video description below. That's over $150 worth of value, which you could get for free, guys. So make sure you don't miss out on that. But now back to the video. So firstly, let's go over positive and negative correlations and then jump into some technical analysis so that you can see how the sausage is made, so to speak. Why is this important? Well, if we can identify that two assets are positively correlated and you're invested in both of them, your risk is generally magnified and you have a greater exposure to the market. And inversely, if you have a number of non-correlated assets, this means you will have less risk exposure, which will help you develop a more diversified portfolio. So when looking at correlation, the most simple way to define this is with using the saying, birds of a feather flock together. Because when you find common fundamentals driving an asset, they often move in a similar manner. For instance, DEC providing SPS tokens with their associated airdrop points. So as an example of positive correlation, we could look at your caloric intake and your weight, because if you were to eat a ton of junk food, your weight would also increase. So we could say that these are positively correlated. However, your dog's name and how fast you can drink a bottle of soda are obviously not and would be negatively correlated. To help you visualize this, let's quickly look at a scatter plot. Basically, we're trying to find a discernible relationship between the two. So as you can see here, as we go further across on the x-axis and further up on the y-axis, if they're moving in tandem, there would be a positive correlation. And inversely, if the further you go across on the x-axis and the lower you go down on the y, it would mean that we'd have a negative correlation. We also have weaker degrees of these correlation too, as I've shown. To find if this correlation exists within two assets though, we can use the correlation coefficient indicator, which is available on most charting platforms. This indicator oscillates between +1 and -1 and does all the math for us whilst showing periods of positive correlation as well as periods of negative correlation. +1 is considered perfect positive correlation, which is actually quite rare. Essentially though, anything between 0 and +1 would indicate that two assets move in the same direction. The opposite is also true. So perfect negative correlation would be -1. This is also rare, but anything between 0 and -1 would indicate that two assets move in opposite directions. A zero correlation indicates the two assets have no predictive relationship. Bitcoin and Ethereum come to mind when talking about a positive correlation, which we can see a chart of here. So in this chart, Bitcoin is orange and Ethereum is blue. And although the prices are wildly different, with the left-hand side of the chart showing Ethereum's price and the right-hand showing Bitcoin's price, irregardless, we can see that a lot of the time the assets are moving in unison, which indicates a high degree of correlation. If we check the correlation coefficient indicator at the bottom that we just spoke about, we can see that there's nearly a positive correlation of +1 most of the time. This brings me to my next point. You can't really rely on the fact that two assets will always be positively or negatively correlated. You should take the mindset that all models are wrong, but some are useful. Correlations need to be tested on weekly or even daily bases, as they can change, and it's easy to fall victim of recency bias and think that because a correlation was present within a certain period, that they'll also be present again tomorrow. An example of where a positive correlation may change into a negative is when the airdrop point period is over on SPS and there will be less common fundamentals between DEC and SPS because it's no longer providing SPS airdrops, which may cause a weaker correlation between the two tokens. So now let's go ahead and look at SPS and DEC to see if any correlations exist. So we can see similarly, as with BTC and ETH, that SPS and DEC both have a strong positive correlation. As with the majority of the time, we're quite close to perfect positive correlation at +1 on the indicator below. So we can see here that these tokens tend to move in tandem the majority of the time. As seen on the correlation coefficient indicator below, we're currently seeing a weak positive correlation of DEC to SPS, which has shown some decoupling throughout recent periods. This is a good example as to why we can't always rely that our positive or negative correlations will always exist, and to make sure that we check them regularly. It's important to listen to what the market is telling us in regards to price action at all times. So what exactly can we do with this information? Well, to put it simply, if you are invested heavily in both tokens, you may very well be overexposed to the potential of sharp volatility within the market. Correlation analysis is used by top institutions to help manage their risk and their overall exposure. Not only that, but this type of analysis can help us understand assets like SPS and DEC and how likely they are to move in relation to the greater market. So I guess the bottom line here is diversification is key, guys. Even when talking about Splinterlands tokens, it's always a good idea to diversify your portfolio to reduce your risk and hedge your investments, or even simply diversifying your capital over multiple assets such as SPS, DEC, cards, SPT, plots, packs, and a plethora of other tokens. That could be the way to reduce your risk. At the end of the day though, it's up to you to determine your appetite for risk and act accordingly. But as an updated analysis of DEC, I think we're now on an extended second wave with price likely to find buying pressure around the 0.17 cent level at our diagonal trend line. A bounce from this line would validate our previous forecasts and wave count, which should then see a subsequent increase in price. A break of our previous trough around the 0.094 level would invalidate this wave count, and we could possibly see us on the B wave of our ABC corrective pattern. But for now, I think it's likely that we bounce off our diagonal trendline support level and move up higher. And that's it from me for now, guys. If you enjoyed my content, please hit the like and subscribe button, as that would mean the world to me. But other than that, I will see you on the blockchain.